And on today's podcast, we're going to be talking about where global crude oil trade is in relation to the different regions out there. When you're investing in oil and gas, it's important to understand that, yeah, normally you're investing in American drilling because of the tax benefits, which they want you to invest in the domestic production of oil. So you're typically investing in America. But it's also important from an investor to know what impacts your price of oil and thus your project, because we live in this global supply. It's energy. So a lot of the oil is produced in the Persian Gulf, the Middle East. This is why the Saudis are so wealthy out there, because they're just lucky enough to have this type of natural resources. The other big ones we hear a lot, and this is aligning with a lot of the world powers out there. The Russia is the next one, and then Africa and South America. So what I wanted to zero in on today is not necessarily how much they are producing, but I wanted you guys to take notice of whether they're a net importer or net exporter. I've got this displayed on the YouTube channel and this graphic, which I've borrowed from the Visual Capitalist. So great online source out there to really break down and understand these things. And for those of you guys listening on the podcast, hopefully this is a great auto journey through this image. But the first thing I want to go over is the amount of exports that these regions are having. In your Persian Gulf, these are your big guys. I'll start from the biggest and work my way down. They're exporting about 16.4 million barrels per day. I know that's tough to understand, but again, just try and follow me in this relation to how these numbers are. The next one is North America. America's in there. Of course, there's Canada and Mexico, but North America as a whole, 9.2 million barrels. The next one is the Russian region, the Northern Asia continent. Net exports of 6.4 million barrels, followed by Africa and South America, which have respectively 4.9 and 4 million barrels per day. So I think it's safe to say that the Persian Gulf makes maybe about 1/3 or so of the entire world production. Certainly the Persian Gulf and North America have the lion's share, about a half. So when you're talking about oil trade, those are the big players, and then you have Russia, Central America, and then Africa. The next thing I wanted to zero in on is the amount of net exports. So what this means is the amount of oil that is being exported out of there. So the Persian Gulf exports 16.4 million barrels per day, but net exports is 15.7, pretty much same number. This is where I think you're seeing all these other regions be very similar, where you're producing a certain amount and then about 80 to 90% is your net export number. The outlier here, and the important thing to take note as an investor, is in North America, there's a big disparity between the amount of exports to net exports. So exports there is 9.2 million barrels a day, but the net exports is 2.1 million barrels a day, about 15 to 20% of that. And you're asking, why is that? Production of oil is being consumed here in America. I think it's safe to say that a lot of the consumers of oil are your big industrialized countries such as America, but then, yep, you guessed it, India, China, the rest of the Pacific. And when the Iran conflict was happening with the Strait of Hormuz being blockaded up, a lot of that oil was having trouble going out to their export partners, which is 2 million barrels a day going to India, 1.9 going to the rest of Asia, 5.1 going to China, and about 4.2 going to Japan and South Korea. But just from a regional geographic standpoint, this is why geopolitics is so important. America's or North America's exports to those four big users, India, rest of Asia, China, Japan, South Korea, I would say a fraction of what's coming out of the Gulf in terms of where they're coming in. North America will export a lot to Europe. Again, geopolitics, just to where they're positioned geographically, it makes a lot of sense, which matches what is coming from the Gulf. So both North America and Persian Gulf are both sending about 2 million barrels a day to Europe. Same thing with Russia, actually, too, going 2.2 going to Europe. One interesting when you're looking at this map is if America exports so much and we use a lot, why are we bringing in some exports? Why are we sending out all this to then take in about a million barrels a day from Central and South America? Now you're getting into the different types of crude, right? You have light crude, which America typically has a little bit more heavier of that. Actually, I shouldn't use that word. They're a little bit more on the way to the light crude because of just the formations out here, and then the fracking methods, which is a more modern way of extracting the oil from the ground, where your South America has a more heavier crude, and thus they'll send a lot of those shipments through Texas to those refineries. And certain crudes require or make for better purposes, but again, it depends on what your infrastructure is set up with to be able to take it in, and it's hard to switch gears being a heavy crude consuming environment to switch it. It's hard to do that. Today I mainly want to cover the where is oil going back and forth in the different regions, and why is this such a situation where there's a global supply, right? Why, when Iran has having trouble and they can't get the oil out, why does our prices in California or Texas go up, right? Because we're all connected in this global trade.